Trading is closed on July 7th, 2022. We always start with our disclaimer. It's my trading plan for tomorrow, July 8th. Remember, I can be wrong, and any trade you make should be at your own risk. We said in order for the rally to continue, we'd have to make a gap over yesterday's high. We did that. Don't be fooled by regular trading hours prices. All elements of the S&P 500 don't open at once. To get an accurate assessment, you have to look at futures prices. And if you compare yesterday's high to today's open on futures, you'll see we did gap over the high. This is a pattern with the early low. Tomorrow should have the early high. This is a review of what we said. During the day, MEJT gave an ultimate buy signal that certainly worked. Said this drop wouldn't stick, prices would retrace. Said this rally wouldn't stick, prices would retrace. Gives us a target of 38.92.29. If we don't gap and promptly if we don't gap up smartly, that's my call for tomorrow. Now, when I give the statistics for the MEJT system, I use specific rules because I used to have a computer program and I couldn't tell the computer program to eyeball stuff. I had to give it specific rules. But before I had the program and didn't have specific rules, I would just eyeball stuff. And way back then, I would have said that we had an ultimate sell signal in the afternoon and an ultimate sell signal in the morning. Now, I can't give you statistics the way I can with the computer because all those statistics I give about how unusual it is for a ultimate signal not to print are based on those specific criteria, and they weren't met. But if I were eyeballing, I'd say we'd undercut this price and undercut this price. Wouldn't have to be tomorrow, but usually you don't have to wait long. We also have a wall into the close with a gap. These things tend to fill and usually fill relatively quickly. And the target is to undercut this low and find support there. Now you could argue maybe this isn't a wall because of the bar here, and that's just a question of interpretation. I couldn't argue with that. I don't usually pay much attention to what happens in the last few minutes. But I can't give you statistics, but I think there's a good chance we undercut this low, undercut this low, and undercut this low probably pretty soon. And if it's not going to happen tomorrow, we're going to have to take this high out early by gapping up. I don't have a count I'm perfectly happy with. Certainly not happy with this one. But there is an ABC with C equal to twice A. And it does stop right in the fourth wave of lesser degree. So if this count just happens to be right, that's where these things tend to end. This is also a 50% retrace of the drop from last month's high. So it doesn't mean we have to stop here, but if we stop here, there's some technical justification for it. Now, we had previously shown that at 32.29.36, the wave magenta C would have a good Fib relationship with magenta A. We also showed gray C at that price would have a good Fib relationship with magenta A, with gray A. So if we have stopped here, and I'm not really totally convinced that we have, just happens to be a 50% retrace. If we do stop here, Black C, will have a perfect fib ratio relationship with Black A. So there is balance of the waves right at this price, today's high. Now I also wanted to pull back to this trend line. It's possible this was close enough, but if we're going to hit the line, it could come either Friday or early next week. So if we do top here, you can have at least a possibility of another straight line drop as we saw in Black A. Doesn't mean it has to happen. We could gap up here for all I know. But if we stop here and move down with authority, there are much lower price targets. Monday I got personal business. Try to make a video. Don't know if I'll be able to do it. Friday's pattern has the early high. Could gap down. Typically it's a rally day with a final hour high, but failure is a straight line drop. And as I say, if we respond negatively to the employment report, a straight line drop could happen. Monthly employment report comes out tomorrow before the open. Can have a strong influence on prices. Can render nugatory any technical analysis done before the response to the report's known. There is a lower target unless we gap and move up smartly. The rules call for it to print. In addition, the wall with gap pattern should fill, and usually, not always, fills pretty quickly. There's wave balance at today's high, 50% retrace from the June high, and a timing date based on someone else's work. The rally just doesn't look over to me yet. I think we're close. But if we do top here, I can justify it technically. I don't put any money at risk till I see what happens to the employment report. We open up here, we forget everything we say, just about, although I think we'll see those prices at some point. But we open down here and start dropping, we could have a real plunge. And we don't have to risk money till we know. Tomorrow has the early high. It's usually a bullish day, but there are lower targets and failures, a straight line drop. And that's today's call.